Hello everyone, this is Ahura and we'll be with you with the global economic outlook in the week ahead, which is going to be the week 27 of 2025. Actually, it's the first week of the second half of 2025 as well. We are entering to the second half while we had very interesting first half in 2025. Too many geopolitical changes, events, the economic events and decisions in the central banks or the governments across the globe, and we had a really interesting first half, and now we should be prepared for the second half, which is going to be a little bit more tough compared with the first half. Anyway, the data so far we had previous. Let's have a short review on the previous week, and then we can go forward and check what we gonna have in the next week. Data so far we had PMI numbers previous weeks were important from most developed and developing economies, and we saw that economic activities in Eurozone slightly got a little bit better than previous weeks. I mean, it was mostly soft, and this, we can say soft with the positive tendency somehow. That made the composite PMI and service PMI all this stay unchanged at the previous levels around 50. And generally, in United Kingdom, the data were somehow a little bit better. I mean, the economic activities were a little bit better, but at the same time, we had inflation higher. That's made the central bank of the United Kingdom to hold the rates by three against six votes. Anyway, in Mexico, central bank cut the rates by 50 basis point. Generally, the data we had previous week confirmed the economic activities gets a little bit better, but at the same time, we have the inflation. We have the higher data inflation numbers, same in the UK, same in Canada, same even in the Eurozone. In United States, previous weeks, the PMS, PCE and core PCE numbers, they somehow surprised the market, especially with the inflation, personal inflation increasing to 2.7% and headline to 2 towards 2.4%, while personal income and spending, both of them, they fell. For the first time in a while, we saw that the personal income is negative and the spending as well, which means that the consumers, they are getting more cautious about the money that they are spending, and so they are not so happy with the spending and they are not so happy with the expectations. CBI consumer confidence also fell to 93 from 98, which shows and confirms this cautious in the market. Even thought that durable goods orders also increased by only 0.5% previous months, while the headline, I mean, the core durables increased by 0.5% and headline increased by more than 16%, which was mostly thanks to Boeing orders. However, they think that the data overall, the data that we had, especially in the labor market and industrial production, generally we can say that the U.S. economy, while it's getting a little bit heated by different economic data, but still seems like strong in resilience and can support itself. That's what we can see in the U.S. economy. With the data we had, now the chance of the rate cut in September, rate cut by 25 basis points for the September, not for the July meeting, for the September increase to more than 70%. That somehow put the pressure on the US dollar index and could support the stock markets, but I will explain on the chart what happened later. Let's go and see the data in the week ahead. Starting from the Monday. Monday, we will have the manufacturing data from the last day of June. We're going to have the manufacturing PMI numbers from the China, where we expect to see a little bit progress in both on manufacturing and non-manufacturing PMI numbers of the Chinese. GDP in the United Kingdom supposed to increase by 0.7% on the data that we're supposed to have on the Monday, while we know that the Eurozone GDP numbers also increased by 0.6% in the first quarter, surprised the market. This is comparing with the 0.5% fall of US economy. That could be, these numbers could be a little bit more interesting data. On Monday, we're gonna have the so many speeches from the Fed members. don't forget, that follow these speeches and make sure that you're gonna understand what exactly they're talking about. Mostly what they had previously telling to the people, it was that the Federal Reserve should be more cautious and should have more data, especially more updates from the tariffs effects on the market to make a next decision. So still the Federal Reserve seems more cautious, and this is what we are expecting to see from their speeches in the next week as well. On Tuesday, we're gonna have the Tonkan large industries data indexes from Japan, where we expect to see that the Japanese economy slightly falling. This is a continuing of the slightly weaker or cooling data from the previous weeks, which means that the central banks now should be more cautious, they should have more doubt about the rate hike that it was expected to be seen in September. Now we can say that the Japanese rate hike could be a little bit later, not in September, not as soon as in September. Tuesday, we're gonna have the labor market data from Eurozone as well. Some of European economies, especially from the German unemployment rate is supposed to stay unchanged at 6.3%, but inflation data in the Eurozone is supposed to also stay unchanged at 2.3% for the first or initial expectations or initial estimates for the June inflation numbers. As mentioned about the speeches in Eurozone, also we're going to have the too many speeches, but Tuesday on the US, we're going to have to add some data. Unlike the S&P global data, which shows somehow the manufacturing and the service activity both a little bit under 50, improving either ISM manufacturing data and the service data, they were somehow positive in the previous weeks. And again, we are expecting to see that the ISM manufacturing PMI to slightly increase from 48.5 to 48.8, and the ISM manufacturing price also supposed to increase slightly, saying that while the manufacturing activity increasing at the same time, the price is also increasing. So that's the harmony of holding the prices higher, which means that the rates also should stay higher. GLTs are due to publish on Tuesday evening, where we expect to see against more than 7 million newly created jobs, comparing with the 8, 9, and 10 million that we had at the beginning of the year, at the last months of previous year. This is the weak number, but still, it means that more than one job, 1.1, 1.2 jobs for each US job seeker. So which means that the labor market is still going to be fine, and still it is fine, and the cooling of the labor market should be more cautious. On Wednesday, we're gonna have the labor market data from Eurozone as well, where we expect to see unemployment to stay unchanged on its historical low levels, around 6.2%. And generally, the Eurozone economy somehow is trying to understand the ongoing condition in the Euro, especially what's going on between the Russia and Ukraine, and after this previous week's NATO meeting. Generally, these data are supposed to support the euro against its currency, against its crosses, but not too much. It couldn't be too much. I mean, we can say, okay, yes, some good positive data we had from Eurozone, but it's not that much that you can see comparing with the other economies. It had a nice some progress that can take the advantage of safe haven stuffs, or to bring the some more investment, or hold some investment in the Eurozone area. Generally, the data, they are somehow positive, but not that much positive that they can compete with the Eurozone, can compete with the other developing economies, or developed economies. We will have Thursday, we will have the trade data from Australia. We know that Australia and New Zealand, they had a little bit tough days in the previous months with the Chinese weak data. Now we expect to see with slight improvement, seeing in China, in Australia and New Zealand, also to be able to see some positive numbers. We're going to have the German composite and service PMIs as well. We expect to see almost no change, but still around 50 area, but still almost no change. That we expect to see around 50.4. But the market's attentions will be on this this week's data, the labor market data, which we are expect to see unemployment rate to stay on Friday. We expect to see unemployment rate in NFP numbers to stay at a little bit unchanged at 4.2%, but the average income increased by 0.3% monthly and 3.9% annually. Generally, labor market data is expected to see more than around 230 newly created jobs, 230,000, 240,000, around these numbers, newly created job. We are not expecting any specific surprise in the labor market, but with this data, we can say that the labor market still seems like strong, and we can expect some positive reaction in the labor market, in the labor data, which means that it can increase the chance of holding the rates for longer by Federal Reserve and increase the demand for the US dollar and put the pressure on the stock markets. That's why we say that the next week also could be, with this data, could be volatile week. Generally, the July is volatile months in historically, that can start with the volatile data as well. While the next week we have this NFP numbers. We will, as mentioned, we have ISM numbers, we have the PMI and manufacturing data. We expect a little bit more positive data in the PMI in manufacturing sector, but not in the service sector that much. Generally, the data are somehow positive. Let's go to the chart. I mean, the expected data. Let's go to the chart and see with this data what we can expect from the overall economy in the week ahead. As for dollar index, previous week's personal income and spending data and inflation numbers increased the chance of the rate cut, but at the same time, it put the pressure on the U.S. economy as the data get weaker data for most economic spurs and deposits and the different categories, which means that stock markets, while we should be happy with the possible rate cost, but at the same time, the reason of the weaker economy, we should be again also can be more concerns, which means that these concerns and these doubts about what's going to happen, this doubts generally is a negative. As much as we have a doubts in the market, it's negative news for the stock market. So that can put the pressure on the stock markets and can increase the demand for the dollar index. So the dollar index would be more slight movement between 97 and 100 for the next 1 or 2 weeks, especially could be positive after NFP numbers, but generally it could be a slight movement between 97 and 100. Stock markets can take a little bit more pressure as this, I mean, the possibility of the rate cut, which can be the good news for the stock market. The possibility is because of the weaker economic data, which means that the stock markets cannot too much take advantage of this condition, and say, so we can say that the stock markets, especially with the technical indicators we can see here, we can say that the stock market is ready for, especially for S&P 500, Dow Jones, and Nasdaq. They are ready for some correction, not the downtrend, changing the trend further, but at least some correction. This correction, the stock markets and slightly negative economic activity expectation can put the pressure on the oil as well. We are expecting to see the oil between 62 and 66 area, around this area, not higher, not lower for this area, could be fine for almost all market participants in energy markets. That's why we expect the oil price around these levels. I mentioned about the stock markets, Dow Jones and Nasdaq, gold, and the gold. Yeah, about the gold. About the gold, which while slightly improvement in the dollar index can put some pressure on the gold price, but at the same time, outflowing money from the stock markets with the profit taking and more doubts in the stock market that we expect, it means that the more money out from the stock market can come towards gold market. So which means that we are with these data and with these expectations, we expect we are somehow the positive for the gold in a week ahead. As for the cryptocurrency markets, the risky asset generally will be under pressure, can be a little bit negative news for the cryptocurrency, but for the cryptocurrency prices, but generally in the cryptocurrency market by itself, we don't see any negative news that can change the market's impact on it. Generally, we are not so much positive, but we are not negative on the cryptocurrencies as well. We are a little bit positive about the gold, on negative about the stock markets, and somehow positive about those US dollar index. This is what happened previous week and what we expect from the week ahead. Hope it was helpful for you. If you had any other question, don't forget to write in the comment section or try to get back to you as soon as I can. Have a good time. Bye.